course, we'll have a guest joining us as well to talk about this story and more. It's been the biggest talking point all of last night and today all day. It is the AI bellwether Nvidia that has failed to woo investors who fueled the recent rally in the stock. In fact, the revenue and gross margin forecasts were not far from expectations, but they failed to live up to a recent history of trouncing Wall Street targets, overshadowing a beat on Q2 revenue and adjusted earnings, as well as that $50 billion share buyback. However, revenue in the quarter gone by has soared to 122% on an annualized basis as compared to three straight periods of over 200% growth in the previous quarters. In fact, shares of the chip maker fell almost over 6% in after hours trading. In fact, it weighed in on the shares of other chip makers and other big tech companies, including AMD, Broadcom, as well as tech behemoths like Meta and Alphabet. In fact, as of market open, we are seeing the stock plummet by almost 2%. So it's down as well right now as well. And of course, we'll be getting you more updates on how the stock is really performing as far as the US markets are concerned. But the big question that we are asking tonight is, why are investors starting to question the company's prospects? Is Nvidia not invincible anymore? And is AI optimism fueled rally? Is that overdone? And to answer those and more questions, I'm now joined by Arnab Das, who's the Global Macro Strategist, EMEA Invesco. Thank you very much, Arnab, for joining us this evening. And of course, thank you very much for taking the time out. I first want to understand from you, despite a stellar performance, I mean, over the past, many quarters as well, and this time as well, at 122% revenue growth, that is stellar. So what's the bad news here?
Well, I think, first, thank you for having me. Look, I think, what's going on here is that the market had been somewhat hyped up, maybe had gotten ahead of itself in the throes of this fourth industrial revolution, and this particular AI aspect of it had been growing by leaps and bounds, and it continued to grow by leaps and bounds, as you say, but slower leaps and smaller bounds than before. So, perhaps what's going on here is a bellwether of a kind of normalization in the AI process, right? All of these technological transformations seem to be accompanied by very strong market performance, maybe even bubble-like valuations, and then something of a normalization as reality sets in and as it takes time for the technological transformation to come through in the technology itself, and then to be embedded in productive processes and the behavior and the work of society and people and everyone's lives, and then eventually shows up in productivity increases, right? So I think a lot of this is, future prospect of AI within this fourth industrial revolution was being priced in, maybe heavily priced in, overpriced even, and that's why you have, even after a little bit of a correction in the sector, you have a bit of a relatively high valuation compared to the rest of the market. I think the bigger question here is, stepping back, does the shine really come off AI? And I think, the prospects for AI to make a difference
and
are
of course,
still
Mr.
very
Das,
strong.
we'll separately address that question. But I want to first know from you, where does Nvidia go from here in the near term and long term? And I also want to understand from you, were there enough grounds for investors and analysts to have those sky-high expectations of Nvidia?
Well, without wanting to, focus specifically on Nvidia or this or that stock too much, I think, the bigger picture here is what matters, and that is that, like I say, the market had gotten ahead of itself. We've seen this before with technology stocks. It's a bit different, very different, I would say, than the dot-com bubble, right? These are real companies with a lot of cash flow, very profitable, a lot of free cash flow, and so I think it's a very different situation than took place in that era. This is, part of the Mag 7, companies that are already transforming the US and indeed the global economy. I think what had gotten ahead of itself was the valuation of some stocks in particular. We see that from time to time. I think that's being called into question a little bit, but I don't think it's really calling into question whether AI is going to make a difference or not. I think what's being called into question is how fast that difference is going to come about, how quick is it going to be in the near future, and also the macro factors have to play in here as well, right? The Fed is around the corner from a rate cut, and possibly it's going to be an important rate cutting cycle. But if you look at how the curve for the Fed is priced, It is a lot of cuts right the way through 2025, but eventually it's a bit of
Right.
an increase in rates. So we're not going back to those kind of zero rates in all probability that we had before. So the upside for extremely long payoff stocks, like technology stocks, like growth stocks, may be less than in the last cutting cycle, right? So I think that's also important.
Okay. Okay. So what does this really mean for the broader AI ecosystem? Of course, you were just hinting at the, rate cuts. Several of them might come this year because, Nvidia has been a key cog as far as the AI and chips ecosystem is concerned. Where does this leave the broader AI ecosystem in the near term and long term? What do you foresee?
Like I said before, this is, I think, a technological transformation, an industrial revolution that's taking place within which AI has a very important role. I think that's going to continue. I think there's possibly a significant amount of hype, maybe some overhyping around it, but nevertheless, it is an important change, right? It is eventually, in my opinion, eventually going to increase productivity. It's eventually going to make firms and households and society as a whole more efficient than they already are. And I think that's what's captured the imagination of the market. And like many of these things, it's probably gotten a bit ahead of itself. But the nature of the change is still there, and we're still waiting for it to happen. So I think the prospects will continue to be bright, even if there are corrections along the way, as indeed there always are in these transformations.
Right. So, Mr. Das, when you speak about AI, of course, many companies are yet to see the kind of, revenue generation that this technology really has. But when you speak about chips, I mean, chips are used in everything that we see around ourselves, whether it is the laptops that we use, it's the smartphones that we use, cars, TVs, and, lots of these other consumer durables. And which is perhaps the reason why countries like India and, of course, the United States are, of course, offering subsidy to these companies. And I mean, you know about the United States as well, right? And there is a chips race, as it were, is going on in the global economy. But keeping all of that in mind, what should investors bear in mind so far as these new age chip stocks are concerned in terms of the investment strategy?
Well, look, I think there's several different segments within this chip story and in the chips market. There are, more commoditized chips at the lower end, and then you go all the way up to the top end where Nvidia and other companies, TSMC, and associated companies like ASML in the ecosystem are involved. It's a lot of high technology, very capital intensive, very skill intensive, very resource intensive in a lot of respects. And as you say, many countries, whether it's the US, whether it's India, whether it's China, whether it's other countries that are trying to buy in or create capacity so that it's not all concentrated in Taiwan or South Korea or indeed China itself. That process is probably still going to continue, right? Many countries are going to want to have security of supply in their supply chains overall for technology, including chips. And that's going to affect different parts of the value chain here and different parts of the segmentation of the chip market. I think what stands out is that the leading edge, very small chips and very sophisticated chips like these chips with extreme computing power, processing power, speed for AI, that's where a lot of value creation is going to be and where a lot of the AI for businesses and for governments, for national security, are going to come into play. So I think that's another reason why this information technology revolution is going to continue. It's going to have a push from the private sector. It's going to continue to have a push from the public sector. And it's going to continue, like I said before, to capture the imagination of the market.
Right.
Just you don't want it to, to get too far ahead of to be far over your skis, so to speak, right? Which
yes,
is,
in fact, what you're really
here.
hinting at is that the growth as far as some of these new age tech companies are concerned and new age technology is concerned, that needs to be gradual and sustainable. And like you rightly said, there will be regulations, and there will have to be regulations around AI and some of these emerging technologies and how they marry with the user privacy and data privacy as well. On that note, Mr. Das, thank you very much once again for taking the time out and joining us here on ET Now. So we'll of course, be waiting and watching out for how the stock really performs over the next couple of days. It's been the AI bellwether, but it's really failed to woo investors despite, the recent stellar growth and, revenue margins and, of course, the guidance that the company has given. In fact, Mr. Jensen Huang himself painted a very bullish picture for the company. But we'll have to see how that plays out over the next couple of days. And